Hello everyone, it's the Cowboy. Welcome to Macro Cafe episode 5. And let's begin and take a look at our markets. Let's start with Bitcoin. A couple of weeks ago, we were still trying to build some kind of a correction here in this fourth wave intermediate in here. And I think, right now we're just, we broke up higher in here. We're trying to finish this primary wave third. And we could be near the end of this move. I think there's still a little bit of time left, and maybe even price action that can go in here. But it doesn't mean that we're going to have a major sell-off coming back in Bitcoin. Possibly a pullback here in this primary wave 4 that can take us, if it really wants to, actually all the way back here to 28,000. But we'll see. I mean, I think there is still room to take 50,000, maybe go to 51,000, 52, and then kind of fall back here in a fourth. And then, we're going to match this with this second wave that I have on here, and then another push up higher here to complete fifth. So I still think Bitcoin could be poised to go towards 100,000 mark towards, until the end of this year. So that's kind of my target for this year. We'll see how fast that will get achieved. But again, if you really wanted to see more about this, just kind of visit my video from last week. We have a series on Bitcoin and Ethereum technical analysis every couple of weeks, or on a daily basis. We do it in our program every single day. So this is kind of what I see in Bitcoin. I think it's still the altcoin market is also evolving nicely, and there's bullish developments on there. It's just a matter of are we really trying to finish up some kind of a fifth wave, and how much power it's actually getting from these levels. But I'm starting to be cautious, and bullish at the same time. All right, so let's take a look at oil. Guys, ever since we've hit those lows in the March of last year, oil has been coming roaring back, and right now we're at about $57 to $58 for a barrel of oil, and it's pretty, it's been acting very, very strong. So this has been in anticipation of the reopening of the economy, on the reflation trade, on all that, very kind of strong narrative that everything kind of will get opened back up. So oil, it's been trying to kind of price that in, and we'll see now that things are going to start to reopen. We'll see if this is going to continue to move higher, or start a period where actually oil is going to start to move sideways. Because if you look at this chart, right, and this is kind of a 1 week chart that I have on here, you can see that this was a pretty massive sell-off. And then if you look at this a movement in here, let's say between 2018 and 2020, you can see that it was, kind of sideways, and it wasn't really directional, right? We have a pretty directional move here between 2016 and 2019, but then we kind of enter a period of sideways consolidation. And I think we might be entering that period again here, and just try to kind of digest this pretty large advance that we've had for about a year now. And what that's going to do to the market once we possibly tag the 65, 64 level, we're probably going to get up there and then kind of fall back, right? So we're going to fall back and try to create some kind of a corrective move in here, maybe for the rest of the year. And that's what that's going to give a look of. It's going to be a look of an inverted head and shoulder. So this is going to be your neckline. That's going to be your left shoulder. That's going to be your head. And then you're going to do your right shoulder all the way back in here. So the moment that finishes off, we'll see at what levels, then the next likely move is going to be to the upside, right? So now we're talking, oil getting above the $100 a barrel. And, maybe that's when, all this kind of inflationary talk will start to kick in. Maybe we'll still kind of drag ourselves along for the rest of this year until the real inflationary forces start to come up here. And then, towards the end of the year into 2022, you're actually going to get a much higher move into the energy sector. For right now, I think we're still kind of digesting and trying to learn about, what all this, virus and lockdowns and reduce GDP output, it's going to mean for the overall economy. So, I would definitely pay attention to that. I think we're coming close to some very strong levels here in oil that are going to offer serious resistance at about 65 on here. And, it's just going to kind of give us a place, to kind of look and digest the move and see what's coming up next. So, going from a 1 week chart to a one-day chart, you can see kind of the subdivisions on here. When I look at this as being a wave A, for example, and a B and a C, just to kind of keep it simple and kind of conservative on a 3-wave advance, but I can also have an alternate in here that says that actually this is not a wave A, but a wave 1 in oil. This is a wave 2. This is another wave 1 that I have on here, follow by a pullback here in second, and then you're actually starting a much larger advance in oil. So I'm watching this impulsive move in a 1, 2, 1, 2, 3, 4, 5, 4, and 5. A couple of weeks ago when I talked into the episode 4, we were just kind of consolidating and correcting in oil into this 4th wave, and I've said I think there's another push up higher coming in 5th. Sure enough, the market kind of respects this Elliott wave structures, and we're pushing up higher here in a possible 5th wave, right? And this is the B wave from back in January 2020, before kind of everything kind of collapsed. That's 65, 64. So I think that's a target that oil kind of wants to tag, and then we should fall back a little bit into some kind of a corrective move. So this is what I'm seeing in oil, and then you can also see that into the moving averages in here. As you can see, the 21-day continues to support the price very nicely. Then you have your 50-day moving average, and then the 200 kind of trending higher. So once we're going to hit these levels back up here, some of these things are going to probably catch up and try to move sideways a little bit. But you never know. I mean, there could be a complete break out of these levels and a continuation higher. So I'm favoring the energy sector. I'm exposed to it into our portfolio there, and I continue to like it. All right, let's take a look at the next market, and I have gold, and I'm going to start here with the 1-week chart. We continue to stay pretty bullish on gold. I mean, we've had quite a bit of a corrective move for the second half of 2020. If you can look at that right there, right, there was a top that we've hit, and since then we've been in a pretty corrective kind of sloppy, choppy pattern that's pulling back in here. So if I look at this as a 1-2 from this wave 2 cycle low, and that's another 1-2 in here, then that's that third of a third, which was a pretty strong move. And now we're digesting this 4th. Still got to do a 5th, another 4th, and another 5. So I think we're coming near the end of this corrective move. I talked about this previously. We've had a couple of long trades. We pulled them out, as they didn't really work. Because we had this kind of failure at about 1959. So, it was just a kind of 3 waves. That could be another very simple X wave, or at the top of the wave 1, and now we're doing a pullback. So as long as we stay above the 1764, I think the gold market has a pretty good chance, and also above this kind of trend line of this channel has a pretty good chance of selling off maybe a little bit more in here, and then pulling back and trying to make new highs. So I'll be watching for that as well, because I think that's an important development. We kind of have to tie that into the interest rates, which I'll talk about it in a second. But I think that this kind of pattern tells you that oil actually wants to break back up higher. And here is a look at the daily chart, the 2-day chart on here, where I have that larger third, and that's an A triangle, B down in C. For a W, you have a clean X, then you have a Y wave in here, so that's a 4th. And then this move from these 1764 lows appears in 5 waves, so I can count it as a wave 1, and now the pullback here is a wave 2. So this count would only remain alive if we don't take the 1764 lows. If that happens, that cannot be a wave 1, because as we know, wave 2 cannot come below the origin of the wave 1, which is right on there. So this kind of gives me a place where if you wanted to take a long, you can place stops below those levels and look for the next leg up higher. If this for any reason this is an X wave and not a wave 1, that would be a WXY, that's an X, and then you're doing here an A, a triangle in B, and down in C, you can still come lower towards the trend line, right? And that becomes wave 4 moves in here, and then you start your advance higher. So either way, I think I'm still favoring the longs as long as this channel in here continues to provide support, which I think it will. In terms of the moving averages in here, the only thing that kind of worries me is the fact that we've broken below the 200-day moving average, which is slight of a bearish signal, but the moving average continues to point higher still. So I don't think it's going to give up on it that easily. You can see we've broken about it here as well. We've kind of tagged it here. So we'll see if this is going to, the price is going to move lower a little bit or just kind of go sideways. But right now we're having a cluster of moving averages all kind of bundle up together. And this says no volatility in gold yet, but I think this is about to explode once we're kind of breaking out of this pattern. So then if the price moves up higher here, then the moving averages are going to start expanding, and you'll have an increase in volatility and a move higher in price. So that's kind of what I'm watching on the gold markets. All right, the next one in here, it's the 10-year yields. So as you can see, I have a 1-week chart. We've been coming down in the yields, for a long time. And there was a period when, the Federal Reserve raised rates in there and they tried to, kind of temper down their asset purchases, and they realized, I don't think the economy will sustain it. And back in December 2018, they kind of freaked out and they said, what, let's just continue to cut them. And they cut them and cut them and cut them. And then obviously with the, virus situation last year, and then with the economy, getting hit and with the lockdowns, the 10-year yields went here very, very close to being negative. And, I'm looking at this as a big flush to the downside after a long period of decline into the yields. So, just in terms of an Elliott wave structure, you can count this as a 1, 2, 3, 4, and 5, and since then we've nicely recovered. Now I have a channel in here. I hope you can kind of see it. It's just this kind of blue channel that kind of contains the price of these yields. And right now we're at about 121, but I think we're back into an uptrend. Now, we're going to be hitting here a period of resistance, a zone of resistance which is between, let's say, 140 and 150. And I think the Federal Reserve is going to watch this very, very closely as the yields continue to increase in here. So this is positive for the economy, right? Now the risk is that something happens and you're getting a bunch of defaults and yields start to fall, or the Federal Reserve's they kind of start to implement some kind of a yield curve control, and they're trying to cap the yields at a certain price because they don't want those to rise to go up too quickly and kind of kill the economy. But remains to be seen. For right now, I continue to look bullish on it. And if I go up here on the daily charts, you can see how it's pretty. Just moved. I'm trying not to screw up my. Sorry about this, guys. Yeah. And so you can see kind of how they're kind of traveling towards the top of this channel. And, I continue to kind of favor the move to the upside in yields. We might get a little bit of a resistance, as I've said, but I think, this is a good indication of what's happening in the economy and the way kind of everything gets positioned toward a reopening. And you can see this into the price of 10-year yields. And it's important to watch these as you're looking at the macro picture overall, just to get a sense of what's happening overall into the gold market, into the S&P 500, into the equities. So the bonds are an important indicator of the overall health of the economy. You can see up here, this is the yield curve. So we have the 10-year yields minus the 20-year yields, and they're being positive, right? So, you had that inverted yield curve that happened back in 2019 in here when we kind of went negative on it. And, those are usually signs that happen before the recession starts, when you start to have an inverted flattening to an inverted yield curve. And since then, we kind of are going positive on it. So this is still continues to be, very encouraging for the financial sectors and for the economy in general. So, this is being watched by a lot of these kind of macro guys, and I encourage you to continue to look at this and kind of monitor it as you're positioning yourself with, different allocation in your portfolio. But this continues to look pretty good and moving higher. So that's an important development. I wanted to kind of show you that we have a rising yield curve. All right, the next one that I have on here is the S&P 500. And as you can see, right, ever since the big sell-off back in March of last year, we've recovered quite well in here. And, there's a couple of counts that I have for you. And, this could be a flat in a fourth wave, followed by a fifth in here. That's, near termination. So I'm measuring it with this wave 1. That's about 100%. And then I'm kind of trying to, you can see in here that I have just very, very close to this $4,000 mark into the S&P 500 that kind of matches this wave one. So if the market wants to kind of sell off and find a major top in here, this would be the perfect level to do it from, right? So we're in a very, very kind of dangerous waters in terms of Elliott wave structure measurement, and a lot of the also positioning into the market. So if you look at some indicators that talk about how many option calls and how much positive sentiment is out there, a lot of them are flashing red signs. It doesn't mean that we have to sell off. It just means that the market is kind of heavily positioned towards more bullishness, which is an interesting thing to watch. It doesn't necessarily mean that the boat is way too much tilted on one side, right? This can continue to move before that happens. So that's why I have this alternate count that says that actually this is a wave one top instead of third, and this is a flat in a wave two, and we can continue actually to break much, much higher into this market. So I am watching these levels cautiously. I'm still bullish on stocks and on the overall market, but I am mindful of the fact that we're hitting some very interesting levels in terms of this kind of fib projections that I have. And if I go from a 1 week here to a 1 day, you can see kind of how I'm counting this move from this fourth wave low or wave two low in a 1, 2, 3, 4, and a possible fifth. I have a couple of other fib zones in here at about, as part of this larger fifth wave. And, as long as we remain above this 36.65, I have to continue to stay bullish. The moment we turn back and we start to take this and start to get more of a bearish development to the downside, then I'm going to be much more inclined to secure possibly a fifth wave top in here or a wave one in there, and then look for a correction and then for a move back to the upside, right? I can also look at this as this being a second wave, and this fifth wave is not over, as this being a wave one, ABC up here in 2 instead of a 4, and a continuation much, much higher, right? So, we might hit a little bit of a resistance in here. We'll see how the market reacts and how deep of a sell-off we're getting, and that's going to give me the more of a sentiment outlook in how to kind of rearrange these counts to make a little bit more sense. So again, I continue to remain bullish, and until the market starts to sell off, maybe take this 3200 level off. I think there is pretty good signs that we can continue to push higher. So this is just a quick look at the S&P 500. The next one on my list here is the dollar index, and I have a weekly chart on here that it's kind of looking at this as, and I talked about it in detail before as well. I'm just going to kind of recap quickly, looking at this as an impulsive decline since about 2000, right, to the dollar, and then from 2008 crisis, the dollar has been in a pretty strong rally in here, right? So you've gone from this kind of $70 mark all the way up here to about 105. So I'm looking at this as a corrective pattern. In an impulse here in this A, then you have this ABC, and then you have a 1, 2, 3, 4, and 5 to complete the C. And since we hit that high, you have a 1, 2, 3, 4, 5 for a wave 1. Then you have an A in here, very awkward B wave, and then a C for a second. And that means that this is a third wave that's in progress. Now, what we could have wave 1 almost done of this larger third. We're going to pull back here in a second and then do 3, 4, and 5, 4 and 5, and continue to decline in the dollar. So these are still, these are just kind of technical aspects and Elliott wave measurements of what's going on. Obviously, you have to look at the fundamentals and some of the other stuff that kind of drives markets in general, right? There is a lot of things that happen outside the United States. The dollar is the reserve currency, and it gets influenced by a lot of other factors. But in terms of technicals, this is kind of what I'm watching. I know we're coming very, very close here to the bottom of the trend line. So if you look up here, that's the count: 1, 2, 1, 2, 3, 4, 5, 4, and 5. Possibly we have finished this decline and we're already starting the second wave, a pullback on here. Now, what kind of gives me an indication that there still could be weakness in the dollar is the fact that we've only risen up here in 3 waves, and every 3-wave advance in a downtrend, in the move against the trend, it's a corrective pattern, and that can lead to lower prices. So either this third wave is not complete yet, and we're still kind of working out, or this fifth wave is not done. So we're going to continue to look lower. I still target, the bottom of this trend line in here, some kind of an equality between this leg of the move and this leg of the move. And I think that's still going to drive a US dollar lower. So based on some of the fundamentals and what happens out there, I'm a little bit more inclined to believe that the dollar, it's going to get weaker over time with the rise of the crypto markets and obviously with the fiscal stimulus and the monetary stimulus that we're getting from the governments. It's going to be very, very hard for the dollar to get a sustained rally. Now, there could be, changes in the policy or quick bursts, let's say, of dollar liquidity, and then the markets can move higher. But until the Federal Reserve switches from, a very easy monetary policy to something where they start to tighten, I think the dollar will continue to weaken. So that's kind of what I'm looking for. Right. What do I have next in here? Let's see. So the next move in here that I have, I'm looking a little bit of the rotations of some of these assets that I've talked about. So we have in here CL, which is oil, and then I have the S&P 500, I have the dollar index, I have the bonds, right, the 10-year, and then I have gold. And up here as a benchmark, I have Bitcoin. As you can see, it's been, one of the best performing assets, let's say, for the past, 5 to 10 years, even though this is just a 1 week relative rotation. And if you're not familiar with RRG, it's a system that's been designed by the Julius de Campenar, and you can kind of Google him and find a lot of information about his system. But what it basically does, it's kind of splits everything into 4 quadrants, and you have a benchmark, and things kind of hover around that benchmark, and you go from improving, which is the blue quadrant, you go into leading, you come up here into weakening, and then you have the lagging quadrant as well. And you can change the benchmark into whatever you want, and these asset classes kind of rotate and move around, and they kind of rally against each other and against a benchmark as well. So you can see in here basically that all of these are kind of massively underperforming Bitcoin. It's just something that I wanted to kind of show you, and they continue to kind of look up here to the left, going west and going south instead of improving. At some point, maybe Bitcoin will take a pause, and then you'll see some of these things kind of start to turn up, and there will be a time where you might want to get involved in this and just kind of reduce the exposure to Bitcoin, for example. The other one that I wanted to show you, it's a little bit of the sectors into the S&P 500. So we're looking at energy, financials, and you can see how, kind of similarly on the quadrants, we're rallying here, and we're kind of comparing everything with the S&P 500. So that's my benchmark right here in the middle. As you can see here on the weekly, going back 1, 2, 3, 4, 5 weeks, energy has been a pretty good sector. Has been losing a little bit of momentum against the S&P 500, but continues to lead. Same for the financials. They're kind of pointing lower here in the weekly, so I'm curious to see if they're going to have enough momentum to continue to the downside, or we're going to take a pause and they're going to kind of turn back in here. So I'll watch what happens, next week and see kind of where that goes. Some of the other ones are still very weak. So industrials are back here into the weakening quadrant. You have materials, and then you can see how the XLK, this is the technology sector, is kind of coming back here into the leading quadrant. And some of these other ones, the real estate and consumer staples and some utilities, are still lagging, but they're starting to pick up a little bit of steam in here. And this up here on its own, it's the healthcare sector. So going from a weekly to a daily, this is kind of how this looks. And you can see how, the real estate is coming here into the weakening. But on a daily basis, financials have been gaining strength. So they were kind of, lagging for a while. And now we're kind of coming back strongly here into the improving quadrant. So I would watch financial actually going into the next week, because I think they're going to probably push up higher here into the leading. Similar story with the energy sector. It's been coming here from a lagging on a daily basis, and it's coming back into the improving quadrant. So even though on the weekly there was a move to the downside, right, we're still not fully, I think we're somewhere up into those levels. So we're still kind of leading on that weekly, and now we're leading also on the daily time frame. So this is important to watch because as I've showed you on the oil market, right, there could be a little bit more of bursts up towards that $65, $70 mark into oil. So that's just a quick look over at the sector rotations, and I'll close off by just kind of showing you really quickly our pro room, and I'll take you to some of the trades, the live trades that we take up on there. And this is some of the stuff that I kind of do with my members. We have we have a pro room where I present daily videos regarding crypto, S&P 500, gold, oil. I kind of go through all of the asset classes as much as I can every single day. And we also have a chat room and a place where we present all the charts and all these updates, right? And then we also have this kind of live alerts on the trades that I take. So most of them are in the cryptos because those have the one that have been the hottest, and we've made really beautiful gains here lately into the crypto markets. And you can see some of the trades that we've taken in here. And we also do options to some of the stocks that make sense, and we also buy stocks and then hold them. And I have a portfolio that I kind of talk about it, and what I'm getting in, what I'm getting out of. And you can see some of the trades that we've kind of taken out, and going back in February, so I can go back all the way to the beginning of January and just kind of keep showing you what we've done on there. But it's been pretty good. So my all my members, they know we have entries that have where I'm going in, what my stop is, what the targets are, and what the chart behind it is, what the explanation is. I kind of go in detail about all of that, so people can understand why I'm using Elliott Wave and why I'm taking certain trades and what I'm looking for. So that's just another quick look. So listen, if you guys want to give it a try and want to join, you're welcome to come and take a look. And I look forward to seeing you on there. So again, thank you very much for watching, and I'll talk to you guys in a couple of weeks. Don't forget to sign up and hit the subscriber button, and leave a like if you think this is cool, and check out next week's video on Bitcoin and Ethereum technical analysis. So talk to you soon. Bye bye.